Welcome to 2025, where investing has never been more accessibly or more confusing. With so many platforms, apps, and strategies out there, beginners often don't know where to start. That's why I created this ultimate guide. If you're just starting your journey, this video will walk you through the key principles of investing step by step. By the end, you'll understand how to avoid common beginner mistakes, how to pick the right investments for your goals, and how to start building wealth today even if you feel like you're starting late. Before we dive into stocks, funds, or apps, let's answer the most important question: why are you investing? Your reason matters. Are you investing for retirement, a down payment on a home, or maybe just to grow wealth over time? Knowing your purpose shapes your entire strategy. For example, someone saving for retirement might focus on long-term index funds, while someone saving for a house in 3 years should prioritize safer investments. Defining your why is the first step to creating a clear, effective investing plan. Now, let's break down a principle that has built more wealth than any lottery ticket or side hustle: compound interest. It's simply your money earns returns, and those returns earn more returns. The earlier you start, the more powerful it becomes. Even if you can only invest $50 or $100 a month, given time, it can snowball into thousands. In 2025, with apps that automate investments, it's easier than ever to let compounding work silently in the background while you focus on living your life. So, where do beginners actually start? The simplest and safest option for most is index funds or ETFs. These funds spread your money across hundreds of companies, giving you instant diversification. Instead of betting on one stock and hoping it takes off, you're investing in the entire market. In 2025, many platforms even let you start with just a few dollars thanks to fractional shares. This makes it possible for anyone, yes, even you, to invest in the same funds as billionaires, with almost no barriers. Another key point for beginners is choosing the right broker or app. In 2025, you have countless choices: Fidelity, Vanguard, Robinhood, Charles Schwab, Webull, all with different features. The best platform for you depends on your goals. If you want simplicity, pick one with automatic investing. If you care about research tools, pick one that offers education and analysis. The important thing is not which app you pick, it's that you pick one and get started. Now let's talk about risk. Every investment carries some level of it. Beginners often fall into two traps: either being too afraid to invest at all, or taking too much risk chasing quick profits. The sweet spot is balancing risk and reward. For long-term goals, safe and steady investments like index funds are usually best. For shorter-term goals, safer vehicles like bonds or high-yield savings might make more sense. The secret isn't avoiding risk, it's managing it. Consistency is more important than the size of your first investment. Imagine someone who invests $100 a month for 10 years versus someone who invests $1,000 once and stops. The consistent investor will almost always come out ahead because of discipline and compounding. In 2025, you can even set up automatic contributions, so money leaves your account and invests itself every month without you lifting a finger. This is the easiest way to build wealth on autopilot. Let's address a dangerous myth: trying to time the market. Beginners often think they need to wait for the perfect moment to invest, but here's the truth: that no one can consistently predict market highs or lows. The market will rise and fall, but history shows it always trends upward over the long run. Instead of waiting, start investing now and stay consistent. Every dip is just a chance to buy more at a discount. Remember, time in the market beats timing the market. Another crucial tip: always have an emergency fund before diving too deep into investing. Life is unpredictable, and without a safety net, you might be forced to sell your investments at the worst possible time. Keep at least 3 to 6 months of expenses in a safe, accessible account. Once that's set, you can invest with confidence, knowing your future is protected against sudden surprises. So, here's the bottom line: investing in 2025 is not about having huge amounts of money or secret knowledge. It's about starting small, being consistent, and letting time do the heavy lifting. With the right mindset and tools, you can grow wealth step by step. Every successful investor once stood where you are now at the very beginning. The only difference is, they decided to start. So why not make today the day you begin your journey to financial freedom?